Welcome to the video podcast, voted one of the best in the marketing research industry in 2019, again in 2020, and this year designated by FeedSpot as one of Market Research's very best YouTube video locations. This is Research Business Daily Report, with the only daily research news video delivered to you Monday through Thursday most weeks, presenting a single news item that we think is of great importance to the industry as a whole. Now, we do rely on viewer support, and if you'd like to chip in, well, hang around till the end of today's report, and we'll tell you how you can do that. I'm Bob Lederer, and I'm in my 27th year as the respected voice in market research. I've got a commentary for you today, and it's all about the numbers not adding up. I'm talking about news reports that say a consortium that includes Elliott Management, which is a current member of the board of directors with a 13% stake in the business, has designs on acquiring Nielsen Holdings for over $15 billion. Elliott Management achieved its goal, vastly expanding the value of its total Nielsen business stock holdings, when it shoved the former Nielsen Management into a split of its media and retail research businesses 2 years ago. Nielsen Holdings, and that's what we're talking about today with respect to Elliott Management, is a global media research and measurement group, best known for its work with television viewing measurement. The other half of what we used to traditionally refer to as Nielsen, that's the Nielsen Retail Research and Measurement Group, has been spun off and renamed Nielsen IQ. It's now held by a private equity firm, Advent International, which made its acquisition in 2020 for $2.7 billion. Remember that number, $2.7 billion. Now, that same Elliott Management Investment Group, joined by others, says it wants to buy Nielsen Holdings. However, I think there's a huge problem. Nielsen Holdings has had a contentious, multi-decade conflict with its most important U.S. clients, and I'm talking about the four major TV networks. Loud public complaints about Nielsen Media's lack of innovativeness, not to mention its mistakes, and its tardy response to client complaints have occurred with growing frequency and noise during the quarter century that I've been in this business. Despite their dissatisfaction, NBC, CBS, ABC, and Fox have always resisted opportunities to jump ship and actually sign on with a service that would compete against Nielsen Media. It was just too great a leap for them. And yet, even without their unwillingness to step away from Nielsen Media, increasing numbers of new television measurement startups have offered complementary, and in some cases supplementary, TV measurement capabilities. Now, though they are far short of hardcore Nielsen Media competitors, these many small companies have been eating away at Nielsen's TV measurement business, eroding part of the network's need for Nielsen. And in the last year, Nielsen Media has confirmed missing crucial numbers of views during a rating period. And it has lost accreditation for its traditional TV ratings, and it has performed inadequately in its digital measurement, leading to desertion by several clients. NBC Universal and Warner Media are two in particular. They have moved on to new measurement vendors, all of which may show serious signs of the major TV networks and maybe a lot of the cable networks finally watering down their business agreements and reliance on Nielsen. When the Wall Street Journal published the fact on Monday of the potential sale of Nielsen Holdings, the stock immediately surged 40%, then settled down to 32% above its price at the start of that trading day. So that was a partial mission accomplished for Elliott Management, because it moved the share price to $22.85 a share. But that was still off 19.6% from Nielsen's 52-week high of $28.42. I can't imagine that if Elliott Management and its buddies take Nielsen private, that they are at all prepared to make anything close to the sizable investment that it's going to take to restore client confidence in Nielsen, not to mention what kind of management would be needed in order to sway those clients back. So recouping in stock price what's already been lost since launching Nielsen Holdings is a long-term, maybe more precisely a long-shot hope by Elliott Management. And paying $15 billion to gain control of Nielsen Holdings, well, maybe the hope is that it explodes the value of Nielsen Holdings, given that Nielsen Retail changed ownership for less than, remember I mentioned a few minutes ago, less than $3 billion, and that was only 2 years ago. Now, Wall Street is not my game by a long shot, but you've got to be oblivious about its current business reality to be the owner of Nielsen Holdings and to walk around bumping your chest about its prospects in the short term. And as its most important clients get more and more comfortable with other TV measurement options, as we've noticed some already are, resurrecting what Nielsen Media used to represent in the research industry, I think, gets increasingly murky as a potential situation. That's a wrap on today's Research Business Report for today and for this week. As we mentioned at the start of today's RBDR, we hope that you will become what we call a Patreon supporter, because this video series is viewer supported. And a Patreon supporter is someone or some organization that's willing to provide a monthly contribution. You can visit our exclusive crowdfunding platform at patreon.com/RBDR. And when you get there, select whatever level of support works for you. And whatever that may be, we thank you for making the visit and for providing whatever support you would like to make. We hope you have a good research day and that this has been a good research week for you, whether you're a client or an agency in the research industry. Let's all have a good weekend, and we'll be here on Monday and hoping to welcome you back. And until then, please stay safe.